Hey everyone, Ray here from Nest Mortgage. Happy International Women's Day to you and happy Bank of Canada Monetary Policy Announcement Day. And today the Bank of Canada followed through on what was a conditional pause commitment from their last meeting in January, where now rates are being held steady, which is a welcome break from the last 12 months. We're basically a year since the Bank of Canada began its war on inflation. And today we get the first pause in that battle. And so, at the January meeting and echoed today, the missing ingredient here is probably time. And even though they have to remain vigilant and keep an eye on things, unless there's an accumulation of evidence to suggest otherwise, rates will stay the same. And so while we have some good things going for us, inflation is coming down and GDP growth stalled in the fourth quarter of last year and is expected to stay flat. Canada is a relatively small ship in the world economic ocean, and there are some headwinds and some factors that the Bank of Canada will be keeping an eye on, not the least of which is probably the headlines we see the most of coming out of the United States, that the U.S. Central Bank, the Fed, and Jerome Powell, their chairman, is coming out saying, hey, expect interest rates to go a little bit faster, maybe a little bit steeper, which does have an impact and influence on our economy. It affects the Canadian dollar. It affects our bond markets. And so that will factor into inflation and things that the Bank of Canada will be monitoring going forward. So some good news overall. Obviously, the pause is more than welcome. The sigh of relief was probably breathed in January, but continued today, which is not a bad thing for us beaten up variable rate borrowers and mortgage holders. So things to watch out going forward is how the world economy plays out, what happens with Russia and the Ukraine, what happens with China's economy opening up and how that impacts global demand, and if it proves to be a little bit more resilient. And obviously our neighbors to the south is probably the most direct impact to us. So those are the things that Bank of Canada will be monitoring. What we're still seeing is a lot of new borrowers moving to shorter term fixed rates or taking shorter term fixed rates, and some variable rate borrowers questioning whether or not it makes sense to get out of. And based on market pricing, those are interesting numbers to run. So for anybody that has questions on that in their current situation or just wants to have a chat on where things might be going for them, by all means reach out. We'd be happy to help and connect on that. Take care out there.